Welcome to today's market report.
European shares rose to a record high on Friday as UK exposed financial stocks gained following a hawkish comment from a Bank of England official, with the prospects of increased US fiscal spending boosting market sentiment. The Pan-European Stoxx 600 index rose 0.5% to a record high of 448.55 points and was set to add about 0.8% this week. The European-only stock index and the European blue chip index added about 0.4% each, trading just below multi-year highs. Bank stocks rose 0.6% to a 15-month high, tracking a rise in Eurozone bond yields. British lenders, including HSBC, led the gains after a Bank of England policymaker suggested an earlier-than-signalled hike in the UK lending rates. Gains in UK-exposed stocks supported insurance and financial services sectors, which were the best-performing sectors for the day. Optimism over economic growth has supported European stocks this year, with several economies loosening their COVID-19 curbs against the backdrop of a steady vaccination campaign. The reopening measures have boosted the travel and leisure stocks, which were set to outpace their regional peers this week with a 4.2% jump. Improving expectations underscore a rapid rebound in economic activity in the coming quarters as the economy reopens. Euro area has plenty of room to catch up in recouping economic losses due to the pandemic, but the hard work comes beyond the initial bounce. European economic sentiment and consumer confidence data, which is due later in the day, is also expected to show an improvement in May. German stocks added 0.4% as the country planned to offer adolescents COVID-19 vaccine shots from early June. Markets also took comfort in the prospect of more liquidity after a report said US President Joe Biden will seek $6 trillion in federal spending for 2022. Biden is expected to unveil his first full budget later in the day. Investors were also watching for a spike in the US Federal Reserve's favored inflation reading, which due later in the day. The mining and resources sector rose 0.4%, supported by a rise in copper prices on hopes of more demand. Among individual movers, Spanish bank Sabadell fell more than 2%, even after it outlined plans for more cost cuts to improve profitability. French playmaker Airbus extended solid gains from Thursday, hitting a near 15-month high after it outlined plans to nearly double output. First crude oil was down 0.72% at $66.37 per barrel. Brent was down 0.53% at $68.84 per barrel. Gold futures was up 0.29% at $1,901.20 per ounce. On the FX front, the GBP-USD pair lost part of its previous day's gain in the Asian session. The decline from the highs of 142.20 can be traced back to the rebound in the US dollar. The GBP-USD pair is trading at 141.80, down 0.11 on the day. Market participants' trading positions were under the influence of the inflationary anxiety ahead of the US personal consumer expenditure, Fed's preferred gauge of inflation measures. Against the backdrop, Fed officials reassured on the continuation of the ultra-easy monetary policy and shrugged off the inflationary fears as transitory, but some divergent tones disrupt the market mood. Dallas Fed Kaplan said improved labor market conditions call for taper talks, which echo Fed Vice Chair Richard Clarida comments on the timing of the start of tapering measures as the economy continued to show signs of growth. the upbeat strain of US economic data, with the latest jobless claims, which fell to 406K, lowest since the pandemic first hit the labor market in March 2020. US gross domestic growth grew by 6.4% in line with the market expectations, and pending home sales data surged to 51.7% year-on-year in April. The US Treasury yields rose to 1.6% post-economic data in the New York session. The US dollar followed the benchmark yields and regained the 19 mark with 0.12% gains. The US dollar valuation and inflationary fear keep GBP/USD bonds nerve in check. On the other hand, the sterling remains grounded against the US dollar after Bank of England policymaker hinted that the central bank will start raising interest rates sooner than expected in 2022. Eurodollar is at 121.77.
This is today's market news. Thanks for listening. We'll see you next time.